Hello everybody, welcome back to another video. I already reviewed my trades for today, but I did want to go over a little bit of my mindset and what I'm thinking and talk about, you know, something that I had considered with my trading. So I have my 4 higher time frame confluence parameters, and I have 2 of my lower time frame confluence parameters. And today I was thinking like, okay, like is 2 out of 4 enough of the higher time frame confluence? And let's because I thought, look, this bar 19, that looks like a reasonable short. And if I had 2 out of my 4 higher time frame confluence, I could say, okay, it's below the open, so that's 1. And I could say we're breaking out below this hourly bar here, so that's 2. And being below the open and breaking out below this hourly bar, that's 2 out of 4 higher time frame confluence, and I would be allowed to take that short. But according to my plan, I need to have 3 higher time frame confluence. I can't just have 2. So, like, I was considering, should I change it to 2? Because after all, I do have 2 out of 2 lower time frame that I need. So if you add those all together, that'd still be 4 out of 6 confluence. Over here, bar, we push up and we flag and make a consolidation. Bar 57, bar 58, getting along here. We're still below the open, and we're inside the prior day range, but the hourly EMAs are bullish, and we're breaking up out of this hourly bar here. We're breaking up out of this hourly bar after 2 bars of hourly consolidation on the 21 EMA. This looks like a pretty good long. There's a pretty reasonable expectation that it's going to come back up here, and I don't want to have to miss this trade just because I don't have 3 out of 4 higher time frame confluence. I have 2 out of 4, and then I'd also have 2 out of 2 lower time frame because the 5-minute EMAs would switch. So that's 2-ish. That's 2 good trades there. Longing here after this flag, and getting bearish here after we've made 3 new lows. Getting short at the bottom of there when it consolidates as the EMAs switch for a push down. Where would I push down to? I'd look left and say, okay, there's a range here. I'll target the middle of this range, which ends up being the S1 pivot. Target the S1 pivot from here. That's 47 points down to 4 points. So 47 minus 4, that's 43 point short in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13 5-minute bars. So just over an hour, or basically this hourly breakout right here. And even if you just targeted this low right here, that would still be 35 points. Still a really fantastic trade that I could have taken right here. But what happened today, let's go to my anti-playbook. Tried getting long off the open. Was up like 5R, didn't take profit, should have taken profit. And then I tried for more longs down here, which was a mistake. I mean, it was just a mistake to leverage up as much as I did. So that's what I'm thinking about. I still don't know what the right answer is. I need to just stop these big drawdown days from happening because it's really hindering my ability to be profitable. I feel like I'm doing a lot of right things, but I'm doing a lot of wrong things as well, unfortunately. So it's tough, it's tricky. I don't know what the right answer is, but I just wanted to put that out there. Something I'm thinking about. is, I think maybe if I look at confluence, add them all together, I think 4 out of 6. That's 2/3 total. I think that might be enough, but we have to look at the whole bigger picture. Looking at my plan, I don't know. I don't know if I'm, because I think the most important like of these higher time frame, it's being above or below the opening level, and then hourly, and then also it's the hourly bar breakout. And then I think the directional hourly EMAs is very important too, but like today, after they've gone up this much, it makes sense for there to be a pullback, for them to consolidate a little bit. It makes sense that we would come back down and retest the 21 EMA. And even though it's against hourly EMAs, I think that's a good time to go short, especially you see 2 hourly bars with wicks on top. I think that would have been a good short, to go short on bar 19. But I don't know. I mean, let's go back to the chart. Even on bar 21, we've broken below, bar 22. It's 30 down to 15. 15 points there. Bar 30. Target the pivot. That's 10 points. These wins add up. So, I don't know. It's tricky. I really want to be trading the hourly chart, trading the breakouts from the hourly bar. Hammer bars on the hourly, like the second hammer bar today, the hammer down after another hammer down bar, great sign to get bearish. 2 hammer bars up, consolidating at the 21, great sign to get bullish. So I think I do need to change my confluence rule, but I need to also somehow figure out how I can avoid shit like this. It's tricky, man. It's really hard to be a trader, and this is one of the problems I'm going to have to solve if I'm going to be a professional and a good trader. So I wish I could come on here and have answers and figure it out, and maybe I will in a year. Maybe my YouTube content will be better and I'll be teaching people more. But right now, this is me going through the hard, challenging struggle part, searching for answers and just putting it out there that I don't really know. Okay, so that's the video. I'll end it there. Appreciate you watching. Please comment. If there's ever a video you comment on, please comment on this one, or a lot of you have my information. My email is in the description. My Discord is in the description. So just reach out to me. Would love to hear some feedback on this video about what you think the right answer is, because I really need to just avoid crap like this. This was a good long. Should have taken profit up here. I risked, and then these were bad longs, okay? Because they were inside the previous 1 hour bar. They were inside this bar. But that's the thing. If I go down to 2 out of 3 higher time frame confluence, or 2 out of 4 higher time frame confluence, I would be allowed to get long in this. So how would I avoid trades like this? That's the question. It's tricky. It's tough. It's tough. Trading is hard. Trading is hard. Maybe I should have just, looked left and said, okay, we're in a range. I don't know. I don't think it's that simple, because I thought we broke out, break and retest. Push up, come down, retested these recent highs. Support's going to turn into resistance. Now we're going to push up. But that just did not happen, and I lost, and it's unfortunate. But it is what it is. I can't change it. All I can do is learn and be better. Maybe the answer is that it's okay to just take losses too, and that this would have been a good loss, and I need to learn it to accept good losses and not see all losses as bad. Just accept losses as a good thing and say that's why I have risk management, because I'm wrong a lot, and get comfortable with being wrong a lot. I think maybe that's a good answer too. And it's just about not blowing up when you are wrong and making sure you can stay in the game for as long as possible. I need to shift my mindset from trying to make money. I need to shift it to just following a system. How can I execute my system as good as possible? All right. So I'm going to think a lot about that, and that's where I'll end it. Thanks for watching. Peace.